The US dollar is surging today on hotter than forecast CPI numbers, something we discussed in Monday's video. So today we're going to take a look at some key levels and targets for this month for both the DXY and also the EURUSD. And if you've been waiting to join our VIP group, I have an incredible offer for you this month that you're not going to want to miss. So click on the link at the top of this video and you're going to be taken to my recommended broker, Blueberry Markets. Right now we're running a promotion, guys, through March 12th. And the really cool part about this is this section right here. So you're going to get lifetime access to our VIP group if you deposit $200 or more with Blueberry Markets using my link. So that means you're going to get lifetime access to real-time market discussions in Discord. You're going to get exclusive charts and setups, daily videos. You'll be able to see my trades in real time. Plus, you're going to get lifetime access to the upcoming course. All for depositing just $200 or more with my broker. And also, you'll be entered to win a DJI Mini 4 Pro drone if you trade at least one lot before March 12th. All right, so again, this is a limited time offer, guys. So be sure to see the link in the description of this video, or if you're on the website, click on the broker link here at the top of the page, and you'll be taken directly to the Blueberry Markets page to sign up. So that's all you have to do, guys, for lifetime access to the VIP group. You don't have to pay me a dime. All you have to do is come over here, open up an account, fund it with $200 or more, place a single trade by March 12th, and you will have lifetime access to the VIP group, plus a chance to win that drone. So the DXY, the dollar index, is up significantly today on hotter than forecast CPI. So that's something that we discussed in Monday's video. So if you saw that, what we were looking at here, looking at the Forex Factory calendar, is this event right here. Okay, so CPI today in the US came out hotter than forecast across the board. All right, so month over month, year over year, this was the number that we talked about in Monday's video. And what I mentioned is that if this was above 3%, okay, if it was 3%, 2.93%, I don't know if that would have had too much of an effect on the markets, but because this came in over 3%, well above that 2.9% forecast, we are seeing the US dollar rally. So again, that's something we talked about in yesterday's video. So looking at the DXY above 104.50, this is not a surprise given the hot CPI numbers that we saw today. All right, now what's going to be key for the DXY is going to be to get at least one daily close above this area right through 104.50 that we've talked about, right? So this has been resistance for the DXY. If it closes today above, this area flips to support, and we have this next pivot right around 105 or just above, right around 105.1. Now, above that, this area up here around 105.80, we've talked about this before, but it's a little bit deceiving here on the daily chart because you can see where we have a lot of price action through here that gets cut off. However, if you go to the weekly time frame, what you are going to notice is that this up here, okay, was a fake out. All this through October was a fake out above this level, very similar to the price action down here, right? So this was a range that had built up here on the DXY, and this was a fake out below. Then we got the rally. This was a fake out above, and then we got the sell-off, okay? So for the DXY, if we get the close above 104.50 today, 104.5, then we're looking at 105.1 and 105.8 over the coming days. All right, so far the market is playing out kind of like I thought it would, because if you saw Monday's video and you stuck around till the end, which I hope you did, I mentioned in that video that these numbers over here, my guess was that this number would come in above 3% today and that inflation in the US would remain stickier for longer. So I know that this is just one reading, right? It's going to take, more than that to see where this trend is going. But if this continues, and we continue to see CPI just kind of hang out in this area and not come down to that 2% Fed target, that Fed mandate, then that is going to make it a lot harder for the Fed to cut like markets think they will. Okay, so if rates in the US stay higher for longer, then that means a stronger dollar, right? And that's what we're seeing so far today. Now, if we flip over to something like the EURUSD, this is what we talked about last weekend, right? The trend line from down here in 2022, where you can see that off of this low, we've got all of these lows through here. And notice, this week, the market is holding below that. So this is why I said that you had to be careful getting bullish on the EURUSD through this support area, simply because it was holding below that trend line from the 2022 lows. Okay, and sure enough, we're seeing a rejection from that area. Now, for the EURUSD, the next step here is going to be this area right around 1.073. So notice back here, we've got the closing price right here. we've got this low. It's very close to that low. We have these two lows from last week. Okay, so if we start to see the euro close below this today and hold below, then this area becomes resistance, and we're looking at this region through here as the next support area. Okay, so right between 1.0635 and 1.067 or so. Okay, now obviously if we get below that down here in this area, then we're looking at a run down here towards some of these lows, and most likely the lows from 2023. Now, I continue to be bearish on the euro overall. I've been talking about this for 6 months. We've seen a lot of price action between there, but one thing that I've mentioned is this chart from FXCM, which uses a pre-euro basket of currencies for the pricing before 1999, because the euro wasn't created until 1999. So this chart right here, everything prior to this point over here is all the pre-euro basket of currencies. But what's fascinating about this, guys, is that since the low down here in 1985, since that closing price here on the 3-month chart, you can see that we do have a trend line off of these lows. We've got this one here, this one, and notice what happened recently, right? We got the breakdown, rounded retest, and so far the euro is coming off. So it's my belief, and it has been for months, that I think we're likely to see the euro trend lower here over the next 1 to 2 years. Now, obviously, there's going to be a lot of trends in between there, as there have been over the last year or so. However, overall, right, when you combine this chart here, the 3-month chart here, with something like this, and also with the DXY, then you kind of start to see why I've been bearish on the Euro USD since the start of this year. All right, so ever since back here, the start of the year with this fake out, this is when I turned bearish, and I don't see that changing anytime soon, especially as the euro is making lower highs and lower lows. All right, so I'll leave you guys with this today, and I've mentioned this before as well, but when we look at the DXY, the weekly time frame, so this back here, this candle right here is something I've mentioned before. So this was a massive red candle here on the weekly. It's by far the largest weekly candle, red candle that we see on this chart. And what you'll notice is that this retrace was very shallow. So all of this up here is an imbalance in the market. Okay, so 109 to 110, this is the area that I've been talking about now for months, ever since back here for the DXY. Now, it's taken some time, but I do think that over the coming weeks and months, we are likely to see the market do this and come up there to retest 109 to 110. Now, there's no guarantee of that, right? But I do think that the DXY is going to want to fill in some of this candle from back here, because that's typically how markets operate. So if the DXY is going to do that, that would be a considerable move higher for the DXY. So when you look at something like the euro, a move down here toward the lows could be just the start, right? Because something like that would push the euro down here potentially toward parity later this year. But of course, it's going to be a level by level market. There are a lot of levels here for the euro in between current levels and parity. All right, but really the name of the game right now, at least so far, is going to be, stickier inflation for longer, potentially here in the US, which again could force the Fed to hold off on those rate cuts, and risk assets, stocks, even the euro and the pound are not going to like that, because it's going to keep the dollar strong as long as this right here is the case. All right, be sure to subscribe to the channel and click that bell icon for notifications. Don't forget to smash the like button to show your support, and also claim your 70% off lifetime access to the VIP group. See the link in the description of this video. Trade well out there, and I will talk to you again tomorrow.